Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within a range. And if we zoom out, we can see that at this point, ES has been stuck in a very defined balance area for over 2 weeks, with the balance area low at the initial support zone and the balance area high at the 68 to 71 initial resistance. So heading into the open at this point, our short-term bias continues to be very neutral because the market is simply stuck in a range. And until we get a break one way or the other, we have to approach this market with a very flexible and neutral bias because it can continue to balance. Now we know that eventually it is going to break from this range. It's actually pretty unusual that it's even been balancing within such a defined range for, at this point, I think the 12th session. So, we know that eventually it is going to break outside of this range. It's only a matter of time. The larger time frame bias continues to be bullish, but short term heading into the open, we do have to be flexible and nimble with our bias on the day time frame. Now, if the market is holding above 57.5 to 59.5, which marks the overnight low, then it tells you that the buyers can still step in. With the larger time frame bias being bullish, it's still a better idea to give the benefit of the doubt to buyers instead of going overly bearish within this trading range. So holding above 57.5 to 59.5 and especially above the 60-75 high volume node tells us that buyers are starting to become more active and dominant. On the upside, like I said, 68 to 71 is really the key resistance with the all-time high at 72.5. We are running on better volume here in the overnight session, and if that continues, then it would open the door for the potential for a break one way or the other, either beyond 68 to 71 or below 51 quarter to 53.75, although we are going to still prefer the buy side, and we are going to have to see some pretty clear-cut signs to tell us that the sellers are really taking over. So the first sign would be a break below 57.5 to 59.5, and then on the downside, in order to break below 51 quarter to 53.75, we would have to see excess weakness on the market internals, the AD line at a fairly negative value and trending lower, the NYC tick printing some extremes to the downside and holding below zero, so we'd have to see sustained downside momentum and participation from the other markets. And a similar idea applies to the upside. In order to get a sustained breakout above 68 to 71, we are going to have to see broad market strength. So strength on the underlying internals, the AD line in positive territory and trending higher, the NYC tick holding above zero and printing some pretty decent values, and the other markets participating in the upside move, specifically TF, because NQ has already been moving up pretty nicely, and it has already broken above last year's high. We just need now some participation from TF to tell us that this is a move where the broader market is participating, and then it would allow for the markets to really get lifted here. So that's really how the markets are set up at this point heading into the open, in a very balanced environment, but within that balance, as long as we're holding pre-market support, initial support, the buy side can maintain control, and that larger time frame bullish bias can still exert itself. So off the open, let's keep an eye on the 60-75 high volume node, see how the market responds to that area, how ES responds to 57.5 to 59.5. That'll at least give us some indication of the short term or the immediate bias off the open, and then we will take it from there.